All right, let's dive into something truly fascinating today. We're talking about Nvidia,
Mm,
the tech giant that, well, it often feels like the very heartbeat of this whole AI revolution. You see their name everywhere.
Absolutely.
Right.
Cutting-edge data centers, stock market headlines, they're unavoidable.
Exactly. But what's really going on under the hood? Today, we're taking a deep dive. We've got a stack of recent sources, the Wall Street Journal, the Times, the Guardian, Reuters, Barron's, AP News, Business Insider, Market Watch.
Got quite the list.
Yeah, we've done the reading, so you don't have to. We want to give you a clear, concise picture of NVIDIA's recent triumphs, sure, but also the challenges they're facing and, what it all means for you.
And what stands out here and why this is so important for our deep dive, it's just NVIDIA's immense influence. It's not just about AI leadership.
Right.
They hold this really outsized position within the broader S&P 500. So understanding their trajectory gives you this crucial lens on the whole tech and economic landscape. It impacts everything.
That's a great point. So let's kick things off with the undeniably impressive news. Because NVIDIA just announced numbers that, well, they absolutely grabbed everyone's attention.
Stellar quarter by most accounts.
Definitely. Our source had highlighted that. For instance, their adjusted earnings per share, that's basically profit per share minus one-offs, came in at $1.05. That comfortably beat expectations by about 4 cents.
Which isn't insignificant at this scale.
Not at all. And revenue, a really robust $46.7 billion. That sailed past forecasts by, about $0.7 billion?
Strong number.
And these weren't just good figures. They actually marked a new record high for Nvidia, explicitly fueled, as you'd expect, by that surging demand for AI chips. Almost insatiable, it feels like.
A key aspect here is how these figures show NVIDIA's incredible ability to not just participate, but to really capitalize on this generational shift towards AI.
Right.
This isn't just some flash in the pan. It really does solidify their market leadership. And critically, the guidance they gave for Q3, projecting $54 billion in revenue. That signals continued strong momentum.
Wow, $54 billion forecast.
Yeah. It suggests there are fundamental market forces driving growth that, looks way more sustainable than some of the quick booms we've seen in the past.
And speaking of confidence, they also unveiled a huge $60 billion stock repurchase plan. We saw that reported in the Wall Street Journal and the Guardian.
That's a big number.
It really is. Now, in a market where people sometimes whisper about an AI bubble, how do investors usually read a massive buyback like that? Is it always just a vote of confidence?
That's a really perceptive question.
Yeah.
Generally, yeah, a buyback at this scale is seen as a strong signal. Management believes the stock's undervalued, they have faith in the future, it returns capital to shareholders, often boosts EPS.
Okay.
But, in a super highly valued sector like AI, a cynic might pause.
Yeah.
They might wonder if it's also maybe a strategic move to prop up the stock price a bit, especially with market volatility.
Ah, okay. A bit of support, possibly. Or to counter those valuation concerns. But honestly, given the strong guidance alongside it, the main takeaway for most investors would definitely be a powerful thumbs up on long-term value.
Gotcha. So those numbers, undeniably impressive. A company firing on all cylinders, it seems.
Pretty much.
But like any high-wire act, even a seemingly flawless performance can have these moments of tension, right? And that's where things get really interesting. Because despite those stellar headlines, not everything was perfectly smooth. And the market reacted with, well, surprising sensitivity.
Very sensitive.
Our sources, including the Wall Street Journal, the Guardian, AP News, they all highlighted some key details. That critical data center segment, the heart of AI infrastructure, like you said.
Engine room?
Exactly. It clocked in at $41.1 billion. Now, that's still enormous.
Huge number.
But it slightly missed expectations. Wall Street was looking for maybe $41.3 billion, a tiny miss, relatively speaking. But why did that fraction matter so much? That's precisely the fascinating part, isn't it? This extreme sensitivity, even to a tiny miss, it highlights, well, it's not just high expectations. Maybe it's a kind of underlying anxiety in the market.
Anxiety. How so?
Well, valuations for AI leaders like Nvidia are just incredibly stretched. They're priced for perfection, pricing in massive future growth. So any crack, any slight deviation from that aggressive forecast, it can be read as a sign.
A sign that growth isn't quite hitting that hyperspeed trajectory.
Exactly. And that could trigger a broader rethink. It just reveals the immense pressure on these AI darlings. They don't just have to perform. They have to constantly exceed this ever-rising bar.
And we saw that sensitivity play out immediately in the stock price.
We did.
Despite the overall revenue and EPS beats we just talked about, the shares actually dropped about 3% in after-hours trading. The Wall Street Journal, the Times, they both pointed this out, shows how quickly investors can pivot.
It's a real reminder that even for a market leader, good enough sometimes just isn't good enough for Wall Street, you know?
Yeah. For you trying to understand this market, these details really highlight the razor's edge companies like Nvidia are walking. Every decimal point gets scrutinized.
And this also brings us to another persistent challenge, one that Reuters, Business Insider, and AP News kept coming back to.
The China export restrictions.
Exactly, the ongoing fallout from those, specifically the limits on the H20 chip, that's the modified GPU, designed to meet U.S. export rules for China.
Right, the less powerful one.
Yeah, that continues to weigh pretty significantly on the company. Nvidia actually estimates an $8 billion revenue hit from these rules.
$8 billion, wow.
Yeah, though newer agreements with the U.S. government have apparently softened that blow somewhat. But these China issues really illustrate the complex geopolitical world businesses operate in now.
It's not just about the tech anymore.
Not at all. It's the real impact of trade policy on the bottom line. And it's a dynamic that goes way beyond market fundamentals. It introduces this layer of political risk that's just incredibly hard to predict.
Okay, so we've hit the impressive wins and those immediate challenges that kind of spooked investors a bit. But beyond those bumps, we also need to look at the broader, maybe more speculative risks that are keeping some analysts up at night. The ugly truths, perhaps.
The bigger picture worries.
Yeah, these aren't just about Nvidia. They're questions about the whole AI phenomenon, the global economy. The Guardian, AP News, Barron's, they all touch upon these growing concerns about an AI bubble.
It's the question everyone's asking.
Right. Despite the strong short-term performance, these fears of overvaluation, of an eventual market pullback, they're definitely mounting. It feels like that classic boom and bust worry just applied to AI.
And you see this interesting tension, don't you, between the tangible, strong performance numbers we just discussed and these more abstract risks of overvaluation.
Is the hype getting ahead of reality?
That's the core question. Is the market pricing in future potential that's just, too optimistic? Or is this genuinely a new paradigm where the old valuation rules don't quite fit anymore? It really requires some critical thinking. Hype versus fundamentals.
It's a tough balance.
Are we seeing a real sustained revolution, or are expectations just outrunning the current reality? It's hard to know for sure.
And layered on top of that, those geopolitical tensions you mentioned, they're a massive factor here, aren't they?
Huge. Reuters, The Guardian, AP News, they keep highlighting how the ongoing trade dynamics, the uncertainty around export controls, especially with China, it's a significant continuous downside risk for Nvidia.
Not a one-off problem.
No, it's like this persistent cloud hanging over their global strategy.
Yeah.
It's almost like trying to play chess on a board where the rules keep changing mid-game.
That's a good analogy.
This geopolitical uncertainty, it's not just a minor hurdle. It feels more like a structural factor that could genuinely redefine market access, reshape supply chains for years.
Especially for a company like Nvidia.
Particularly for them, yeah. So crucial to national strategic AI interests.
Yeah.
You could even see a potential fracturing of global tech markets because of this. That poses really complex long-term challenges.
And just to underline how volatile this all feels, Reuters reported that the options market, where investors bet on future stock moves.
Gauging sentiment.
They were pricing in a potential swing of plus or minus 6% for Nvidia's stock right after earnings.
Wow, 6% either way.
Yeah. That signals really high sensitivity, right?
Yeah.
And just inherent risk baked into that valuation. So for you listening, how do you balance the undeniable excitement around AI with the caution needed given these market and geopolitical realities? It's tricky.
It is. And that level of expected volatility really reflects the market's awareness of the tightrope Nvidia is walking.
Right.
Every piece of news, every geopolitical shift, every data point on AI adoption, it gets magnified.
Yeah.
Its potential impact is huge. It suggests investors are acutely aware of both the massive upside and the significant downside risks that could pop up fast. Constant vigilance required.
So putting this all together, the incredible highs, the minor stumbles, these big, broader risks, what's the sort of consensus from the analysts watching Nvidia?
Well, MarketWatch really highlighted that tactical reaction we talked about. Despite the overall revenue beat.
Yeah, the top line looked great.
Exactly. But that slight dip in data center results did spook investors. It just reflects those incredibly high stakes tied to Nvidia's AI growth path.
So even a small wobble matters.
It does. This summary from all the sources really underscores that constant reevaluation happening in the markets. It's not just about now. It's about anticipating future hurdles, future opportunities.
Looking ahead.
Always. The slightest hint of a slowdown or some unforeseen challenge, it can shift sentiment fast. Even if the big picture still looks pretty solid, the narrative can change really quickly.
And the ripples spread wide, don't they? Barron's and Reuters both touched on that macroeconomic impact. Analysts are basically warning that any disappointment from Nvidia could echo across the whole market. Given its huge role in the S&P 500, the whole AI space, it's a bellwether.
Absolutely. Its performance is seen as a critical read on the health of the entire tech sector.
So no pressure then.
Right. And that focus we're seeing on upcoming guidance and crucially China execution, like navigating those H20 chip challenges, it really emphasizes how forward-looking these evaluations are.
It's all about the future.
For companies like Nvidia, the valuation is often a bet on future innovation, future market capture, not just today's sales. So their ability to navigate these complex issues, especially in this charged global environment, that's key to keeping that bullish sentiment going.
It really shows how global trade, national security, tech leadership, they're all tangled up now.
Increasingly intertwined, definitely.
Okay, so Reuters and AP News also pointed out, analysts think the stock's future really hinges on executing well with those China-related chips like the H20.
Getting those sales despite the restrictions.
Right, and whether that upcoming guidance can keep the positive story alive, it feels like the view is maybe cautiously bullish long-term, but with a big dose of short-term caution mixed in.
That sounds about right. Acknowledging the potential, but very aware of the immediate hurdles.
So for you, as a learner trying to make sense of this, understanding that delicate balance, the potential versus the pitfalls, that's really key to cutting through the noise, isn't it?
It truly is. It shows that even for a company at the absolute peak of innovation, external factors can become just as critical as their internal execution.
What an incredible deep dive. We've seen Nvidia hitting record highs, really fueling this AI revolution.
It's undeniably powerful.
But at the same time, navigating these really tricky waters. Super sensitive investors, complex global politics. It's just a powerful illustration of the high-stakes game in tech today. Innovation meets geopolitics meets market psychology.
All colliding.
Hopefully this has helped you cut through some of that noise, offered a clearer picture, and maybe sparked a few aha moments for you.
And perhaps it raises an important final question for you to chew on. In this era we're in, defined by these rapid tech leaps, but also global interdependence, how much of a company's value comes from its current innovation, and how much is driven by just the sheer belief in its future potential?
Belief versus reality.
Especially when that future potential is so tightly linked to things like geopolitical stability and whether they can even operate effectively in a potentially fragmented global market. What do you think is the bigger force at play right now?